What if I told you you've been trading the fair value gap wrong all this time? You probably wouldn't believe me, but by the end of this video, you're gonna know exactly why I'm saying that. This is literally the last fair value gap video you're ever going to need. And if this is the first fair value gap video that you're ever watching on YouTube, then consider yourself lucky, because you're skipping over a lot of the BS that a lot of these other traders are teaching about this concept, and they're teaching it in the incorrect way, unfortunately. And the reason why I say all this is because I've mentored hundreds and hundreds of students in the past couple years, and I always get the same repeated questions. Which fair value gap is correct? Which fair value gap should I trade off of? Which is the incorrect one? Why is this one incorrect and why is that one correct? Why is there 3 of them, and which one should I choose out of the 3 fair value gaps that have formed? If you guys have been trading ICT concepts for a while, or maybe even just a little bit, you guys have probably noticed on the charts there can be at times sometimes multiple fair value gaps to choose from. And as a beginner trader, you probably don't know which one is the correct one to choose. And that's what we're going to be breaking down in this video today. I'm going to be showing you guys which fair value gap is the correct fair value gap and why it's the correct fair value gap, without second guessing yourself. And the last thing I'm going to show you in this video is how to trade continuation moves off of fair value gaps in the correct fair value gaps. And by the end of this video, you're going to become a fair value gap master and never choose the wrong fair value gap again. And like I said, there's a lot of traders and mentors out here teaching this concept wrong. But again, I'm not just saying that to say that. Let's actually get into the charts and actually show you what I'm talking about, because nobody teaches fair value gaps in this way that I'm about to teach you. So let's hop on to the charts and let's get to it. All right, what is going on, YouTube? Welcome back to another video. So in this video, we're going to be going over the fair value gap and how to correctly trade the fair value gap. Because like I said at the beginning of this video, a lot of beginners, a lot of even intermediate people, and even people that have a lot of experience in ICT concepts, you guys are trading the fair value gaps wrong. Like, you guys, a lot of you guys don't know how to trade the fair value gap the correct way, or which fair value gap to actually pay attention to. So in this video, that's exactly what we're going to be going over, is what fair value gap is important, what fair value gap should I put more emphasis on, and which fair value gap should I actually pay attention to whenever I'm trading live price action or even backtesting, right? Literally, this way of trading the fair value gap, in my opinion, is the correct way to trade a fair value gap. So let's go ahead and get into the video here and explain everything that I am talking about. So the important fair value gap, right? What do I actually mean by this? So I'm going to just make this super simple on you guys. I'm not going to try and drag this video out for a whole hour long, right? I'm going to make this extremely simple for you guys to follow, that even a 5th grader can understand, right? All right, so let's say that we are reaching for an objective or have already reached an objective. Let's say that we've swept some sort of liquidity or have broken a low or something like that. So let's say, assuming that we're in like a bearish trend, right? So let's say that we've broke this low here, this internal low, and let's say that we have another objective that we're aiming for, right? Like our main draw on liquidity. Let's say that it's like a previous day low or something like that. So let's say that we've broken the trend and we are reversing down into our main objective, and we just broke this low right here, okay? So the fair value gap that I am putting emphasis on, and that the ones that I'm talking about, are going to be the fair value gaps that form either after breaking this low, or even if price action has swept this low, meaning like a wick, and we haven't closed a body below this low. So if we swept it and we actually formed the last FVG that formed after breaking that low right here, if we revisit this, right? So let's say we swept this low here and we push back up to the fair value gap that was formed after sweeping this low. So let's say we come back up here and revisit that fair value gap. In theory, this fair value gap should hold down to our next objective, because if you guys don't know, the fair value gaps are a continuation PD array, right? They're not a reversal PD array. They should continue the move to our next objective, right? They're a continuation PD array, right? They're a continuation POI. It's what smart money refers to as like a reference point, right? So they can grab their orders and send it down to the next draw on liquidity. So let's say that, again, this line down here is like a previous day low, previous week low, just something like that, right? And I'm sure that you guys can see this line, right? So my camera's not getting in the way of it. Seeing that this low was broken, right? And we can even say that this low, right? Let's say that there was a low right here. Let's say that there was a low right here, right? That got broken through. And assuming that this low made a new high and we broke the structure or whatever, and we formed a fair value gap. That's why these fair value gaps end up holding, because the lows that got broken, right, in a bearish trend, if we form a bearish FVG after breaking that low and we revisit that fair value gap, in theory, that fair value gap should hold if we have clear objectives to the downside. So again, you can use fair value gaps, and you should use fair value gaps as continuation PD arrays to reach the last objective or your main draw on liquidity, right, for the day. So again, if we break a low and we form a fair value gap, or even sweep a low and we form a fair value gap and we revisit that fair value gap, then this fair value gap should hold to our next objective, right? It should deliver from that fair value gap to our next objective. It's going to be the exact same thing for a bullish trend, right? So if we have our main draw on liquidity up here, anytime the highs are broken through, that fair value gap that forms after the high was broken through, that fair value gap that forms either above that high or below that high, right? That last fair value gap that forms below that high if we sweep it, or above that high if we break it, that fair value gap should hold to our next draw on liquidity. Now, just a quick FYI, draw on liquidity is going to be very, 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 very important when trading fair value gaps this way, because you actually need price to be drawing towards something if you are trading the lower time frame continuations off of a higher time frame trend, right? If you're trading these fair value gaps this way after breaking highs and you're looking for continuation, you need to have a very clear objective. That is number one. Now, if you've already cleared that objective for the day, that can still work. So let's say if we clear the objective for the day, but we want to keep continuing higher, then the fair value gap that forms after clearing that main objective should end up holding if we were to continue bullish, right? If it doesn't, then that means that price may be in store for a retracement or some sort of reversal back down to maybe a discount of this displacement leg that took out that draw on liquidity, right? That main objective. So let's go ahead and jump onto the charts so that way I can actually show you examples of what I'm actually talking about. All right, so jumping onto the charts here, we have this 4-hour FVG that just swept out this low right here. All right, so we just swept out this internal 4-hour low right there. So assuming if we are looking for continuation to the downside, down like to this low right here, or down to this next 4-hour fair value gap, then we would assume that this 4-hour fair value gap is going to hold, right? Now, how can we assume that this 4-hour fair value gap is going to hold? Because this logic here applies to every single time frame, the 1 minute, the 5 minute, the 15, whatever. So the way we can try and find our confirmations to see if this 4-hour fair value gap is going to hold is just using time frame alignment, finding that 15-minute confirmation if we are going to actually go down. So if we go to the 15-minute, we can try and find our flow state model, right? So right here on this day, we did have a nice drop lower, right? So we did have a change in state of delivery right here, okay? So let's even zoom in and let's start fractalizing the PD arrays, right? So our first 15-minute fair value gap being tapped right here. So same exact concept and same exact logic right here is like, if this fair value gap forms after breaking this low here, this 830 low, and we close below, this fair value gap should hold down to our next objectives, right? Down to our next sell side objectives, if truly bearish, right? So this fair value gap here, this 15-minute in this 4-hour fair value gap should hold to continue lower, right? We have all the characteristics here of our flow state model, if you guys watched that video. But even then, a change in state delivery is like pretty much enough out of a higher time frame PD array, right? So we end up pushing higher. We tap the 15-minute fair value gap here at 1130. So let's even start zooming in lower. Let's start going to the 1 minute and let's start looking for our change in state delivery on the 1 minute time frame. So that way we do not have to risk more money than we have to, right? We don't want to just enter on the 15-minute time frame here. At least I don't like doing that because I want to try and get a lower time frame entry, but also take that lower time frame entry to my higher time frame draw on liquidity, right? If I'm trading fair value gaps this way, this is what I always do. So I start zooming in, right? So we tap the 15-minute fair value gap, and right here we have all bullish candles. So if you guys watched the flow state model, you guys know that the change in state delivery is going to be all the way down here. That's way too far. So we would wait for price action to make another high potentially, right? Maybe consolidate, make another high, and then displace lower, right? We don't have that here, okay? So we actually have us pushing higher. Again, 3 bullish candles here, no change in state delivery. So once we make a new high here, our change in state delivery will move up to here because we make a new high, right? Series of up close candles, making a new high while in this 15-minute POI. So we can see that this 15-minute fair value gap does not work, right? We end up pushing higher to the next one, right? So let's go ahead and mark out our next 15-minute fair value gap, right? So our next 15-minute fair value gap, and this is in a premium of this little morning displacement range right here. So mark that out right there. Let's go to the 1 minute. And you can see we don't have a change in delivery anywhere right here. So after seeing that, we could assume that the draw on liquidity is going to be this 10 a.m. high, this morning high, and we end up hitting it right there. All right, so that's how I would look for continuation off of a higher time frame PDA rate, at least in this example here, right? We have a 4-hour fair value gap that just formed after sweeping that low. But this is just, I'm showing you guys how I do it if I'm looking at fair value gaps and looking at trading fair value gaps this way, right? If I'm expecting a bearish fair value gap that just swept the low or broke a low to hold and continue that bearish trend, I'm zooming into the lower time frames to get that confirmation, because as a day trader, at least for me, right, speaking for myself, I don't know how you guys trade, but hopefully you guys trade a similar way. I'm assuming you guys do, is we want to enter on the lower time frames to get the best possible risk and aim for that higher time frame draw on liquidity, or aim for that higher time frame continuation to get the best possible reward, right? Lower time frame entry, higher time frame draw on liquidity. That is the best way to trade, in my opinion. Now you can see how the 15-minute fair value gap did not hold. We end up sweeping liquidity. So that's chalked right there, right? So if we go back to the 4-hour, just real quick, this is already the new weekly opening. So, that's a whole other topic for another video, is including time on these fair value gaps as well. But you can see here, last week we ended up sweeping that low. This fair value gap, it might not hold because the 15-minute is not, we're not getting that confirmation on the 15-minute. All right, so if we just fast forward here, we already disrespected it. So the way I look at fair value gaps is if we close a body above the fair value gap, it's disrespected, and I just go ahead and delete the fair value gap. But I'll show you guys, I'll just keep it up for, video sake. You can see we pretty much inversed this fair value gap, right? So now we end up getting displacement towards the upside. This is not what you want to see if you're bearish. If you're expecting continuation to the downside, right, to this next low or to this next 4-hour fair value gap, you do not want to see opposing PD arrays get formed, specifically opposing fair value gaps to the other side, because you can see we have speed and displacement towards the upside now. And you can see how this fair value gap here formed after breaking this swing high here. Same thing with this FVG, right, with this high here. So we broke these internal highs. We formed fair value gaps here. So this FVG formed there. And then we have another new 4-hour fair value gap forming above this high. So my attention would go to this 4-hour fair value gap right here. So if we come back and tap into this 4-hour fair value gap, what I would do, again, to figure out if the trend is going to continue higher, is I would just go down to my 15-minute and look for confirmations on the 15-minute chart, right? So if we go down to the 15-minute, because real quick, let's just go back to this example here real quick. A lot of ICT traders are looking at this displacement range from this low up to this high where we start retracing, and they're looking for equilibrium. They're looking for this discounted fair value gap. Well, you can long in a premium of that little displacement range here, because this fair value gap, if price is truly bullish, if we're trying to continue higher up to the next objectives, which are these relative equal highs up here, right? Very clean equal highs. Then this fair value gap that broke this most recent high here and the most recent fair value gap that formed above that high should technically hold. So if we go to the 15-minute time frame, we can look for our change in the state of delivery. And what do we have here, right? Nice CISD. This is an order block. 945 sweeps to 930 low. We tap into that 4-hour fair value gap. We have nice displacement to the upside. You could see how price pretty much revisits the opening price of this last down close candle that swept liquidity, and then we closed above the opening price of this last down close candle, right? Doesn't matter that we disrespected the fair value gap. As long as this order block or CISD holds, we're good. So this is literally the flow state model right here, right in front of your face. It ends up holding, refers back to the opening price of this candle here, and again, our draw on liquidity, our objectives are higher up to this equal highs right here, up to this very, very nice liquidity pool up here, right? So you would enter right here expecting price to get all the way up to here. So I know some of you guys might be like, damn, that's fucking crazy. Well, this is, in my opinion, how you trade fair value gaps. So you would try and aim for that. Obviously, I don't know if price is going to get all the way up to there on this day, but you would obviously want to trim, right? You'd want to start trimming as price ends up getting all the way up to here, because this is already like 212 points. Like, this is already insane, right? And you can even fractalize this even more, right? You can make your stop even tighter. You could put it down to this low here. You could put it down to here, because I know this is a pretty big stop here, but you get my point. So if we're getting into the 15-minute CISD or a 15-minute order block, you can further fractalize that. You can go to the 1 minute, try and find a change in the state of delivery there. So then you can get on the 1 minute and aim for, the 15-minute reward, or aim for that higher time frame reward. So this is how you trade fair value gaps, right? So let's go ahead and continue this here. So you can see how we formed a new fair value gap right here on this 4-hour chart, right? new 4-hour fair value gap formed. And again, this does not just have to be on the 4-hour time frame. This can be literally on the 1 hour, 15-minute, 1 minute during, intraday price action. This can be on all time frames. I'm just showing you guys the 4-hour because the 4-hour is extremely clean on this example. So if we just fast forward, you can see how price just keeps referring back to this new fair value gap here, this new one that was formed above these highs and above this high that it broke through. And it just pretty much retests it all the time, right? And our draw on liquidity, again, is still all the way up here, right? At these very, very nice equal highs, okay? So if we were to push up here, and form a fair value gap above these highs, then I would assume that these highs are next, right? Because our draw on liquidity is higher, price is obviously displacing higher, so it's trying to draw up to these higher time frame draw on liquidity, right? Up to these higher time frame objectives, right? So if we fast forward, so we end up pushing higher, and then we end up breaking these highs here. Now this fair value gap, right? This is the most recent fair value gap that formed after taking that high. So this is the fair value gap I would be looking to take if we come back down to it. So let's fast forward here. So we come back down to it, we tap it, and let's see, our next draw on liquidity is going to be right up here, right? So let's go ahead and fast forward this. So we end up respecting it, and we end up pushing right up to it, okay? So in this example right here, I would be looking at this fair value gap, right? Because this is the most recent fair value gap that formed above here. And I'd also be looking at this one too in case it wicks down just because they're like right next to each other. So we could look at these fair value gaps to hold, but you can see how we've already swept all the objectives here. We've swept all these minor buy side levels here. So the external highs are all the way up here, right? So these are our next bit of objectives if price wants to continue higher. So you might be wondering, what do you do whenever, the fair value gap gets disrespected like this, right? So whenever the fair value gap that breaks the high gets disrespected like this, you're most likely going to be in a retracement or possibly a reversal, okay? So that's very, very important to know. So if you disrespect the most recent fair value gap that broke that high and form opposing PD arrays to the opposite side, you're most likely in for some sort of retracement back down to maybe a discounted leg or a discounted PD array of whatever dealing range that you are dealing in. So right here, we form a bearish fair value gap, and we pretty much inverse that fair value gap that broke this high right over here, right? So if we just fast forward this, you can see it respects it, and then it ends up dropping lower, and it keeps going lower. And right here, right? So we end up coming to sweep all these lows out right here. Now, I always delete the fair value gaps that we've used before just so my chart doesn't get messy. But you can see how this bearish fair value gap here on the 4-hour ends up forming after sweeping out this low. So if price is truly bearish, I would expect this to continue lower, right? I would expect this to continue lower, right? I'd expect this to hold and continue down to maybe, these relative equal lows down here, right? But price doesn't do that, right? We're coming right back up to here. It respects it for a little bit, right? And then we have this new day opening up here, and then we end up closing above it with opposing fair value gaps forming, right? Not what you want to see if you're bearish. And now on top of that, we combine the same logic here, right? We end up sweeping this high here. We end up forming opposing bullish fair value gaps, right? The opposing PD arrays to the opposite side. So that's not what you want to see if you're bearish, right? You do not want to see it get disrespected. And on top of that, forming opposing PD arrays to the opposite side, especially ones that broke the high, right? The fair value gap that broke and swept this high, you can see it right here. You can see how it respects it here. And then we push higher up to these equal highs right here. And now, again, same logic, right? So our DOL is going to be up here. Our draw on liquidity is going to be up there. And now this fair value gap here formed above the equal highs there, formed above this high there. So we would expect that fair value gap to hold up to our draw on liquidity, which happens right there. It takes it out right there, right? We close above. So that is how you trade fair value gaps, in my opinion. Those are the most important fair value gaps to pay attention to. The ones that sweep or break the lows or highs, you would expect those to continue, depending if you have very, very clear objectives. And that's how you can long in a premium or short in a discount. If you have a clear objective, like for example, if we're coming back down here, right, where we started this, this whole example here. If we're coming back down here, our next objective is pretty far, right? Our next objective, if we're looking at internal, we're looking at this fair value gap for our next objective. But why would we even be looking at that fair value gap, right? I like always aiming for swing lows and swing highs always. You can use fair value gaps as a form of drawing liquidity. They're not a strong magnet like swing lows and swing highs are for price, right? So we end up sweeping this, still respecting this. So our next draw on liquidity, our next major one would be all the way down here. So if we're expecting this to keep going lower, we would expect this fair value gap that swept out this low here, we would expect this to hold. But since we don't have any really clear objectives down to the next, draw on liquidity, right? It's pretty far. We end up disrespecting this. Then we end up getting displacement to the opposing side, breaking these highs, forming new fair value gaps above these highs. So these highs would be respected, right? And again, as a new ICT trader, these guys are pretty much waiting for discount all the way down here, but they will never get that, bro, because these fair value gaps that form above these highs are supposed to hold. ICT likes to call this institutional order flow entry drill. I just call them the important fair value gaps, right? These fair value gaps actually serve a purpose. They actually do something. They actually break highs and lows. So they should, in theory, hold to the next objective, right? So when we have big displacement like this towards, whatever highs or lows, and we're drawing up to something, that's very important when trading fair value gaps this way. I hope you guys enjoyed this fair value gap video and how to actually trade fair value gaps the correct way. Nobody's actually teaching it this way. So if you guys see other educators teaching it this way, you guys already know what's up. But that's going to be it for this video. If you guys want a free PDF on this exact video here and how to trade the important fair value gaps or what fair value gaps to actually pay attention to, there will be a free PDF in the description down below. You guys can get it for absolutely free. And if you guys want to be mentored one-on-one by me and have a exclusive trading psychology coach and best-selling author coach you guys on psychology, yes, I have a best-selling author in my mentorship group. If you guys want personal guidance from me, one-on-one guidance from me, and a bunch of other things, we have profitable coaches pretty much giving you guys step-by-step guides on how to be profitable, on how to get funded this year. If you guys truly want to make this your fucking breakthrough year, you guys can book a call with my team down below in the description. It's the first link in the description. The free PDF will be the second link in the description. And if you guys want any of my other free guides, like the unicorn model, how to be a full-time day trader in 2025, the flow state model PDFs, you guys can find those in my link tree. It's going to be the very last link in the description down below. But with that being said, hopefully you guys enjoy this video. Leave a like, subscribe. It really helps the channel out. I'm really trying to get to 100,000 subscribers this year. So if you guys can help me out with that, it's a very big goal of mine this year. But yeah, if you guys can help me out with that, I fucking love you all. And I appreciate everybody watching these videos. As always, have a good rest of your guys' day. And I will catch you guys in the next video. Peace out.